Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a phenomenal day. Wow, we got a super important update here. We're going to talk specifically about the fundamentals in the back end here, about the government shutdown slated for tomorrow. It's a pretty big deal based on the Democratic Party there. I also want to say thank you for being an amazing and phenomenal part of my life. I know I say this all the time, probably sound like a broken record, but I really appreciate all the wonderful support over the years for whomever's been watching, whoever's new too. We got, 20, 30 plus new members that came over from yesterday's video. So that's awesome stuff. Thank you again so much for the vote of confidence. I'll always do you right because I'm always looking for your best interest. And simply put, I'm just kind of trying to teach you the best practice for being a better trader. That's all there is to it. Now, other than that, when we look here, we're also going to double check some important order block data. This does identify key levels of support and resistance locally. And then, of course, some CME futures, as well as some liquidation data here on the macro that I think is pretty telling. And then, obviously, kind of the correlation between the coins that we're going to be looking at and Bitcoin. How do they pair? How do they, how are they inversely paired or, connected essentially? And what kind of outliers are we looking for here? Specifically, some areas of interest, more so specifically the ETF net inflow. We want to talk about that too. So we got a pretty big one today. Be sure to stick around. Let's take a closer look. All right, folks, before we get started and jump into the back-end juicy liquidation data, we're going to talk quickly about the fundamentals. Now, I'm not a fundamental analyst, so please understand that. Simply just giving you the bumper sticker version here, but simply put, we are looking at a government shutdown tomorrow. Apparently, the odds are pretty high, and the concept here remains fairly accurate. It's going to impact the American people here and essentially crush the working Americans, right? That's the concept. I'm not sure how bad it will impact or if we're already priced in, but it makes sense that the price is pulling back a little bit today in light of this. So the general rule of thumb when we have fundamental catalysts like this happening is to ensure that you are using proper risk tolerance, right? Whether or not that's tightening your margins, making sure you're not over leveraging or not trading at all. That's generally the best practice, is to avoid trading on average while these things happen. So government shutdown is slated for tomorrow, simply to oppose President Trump. That's kind of how the left party is pursuing things right now. At least that's the understanding, right? So if you have more information on that, please feel free to comment below. Love to hear it. Of course, there's absolutely nothing wrong with voting, providing your opinion, of course. There's generally no right answer, and I don't really care, honestly, about that stuff. That's why I cover the charts mostly, but just know it's relevant, and fundamental catalysts often will invalidate the trade setups that we have, right? So with what you're looking at here today, what we're going to be looking at today, this may be a short-term fix, and we're going to also look at some macro structures too to make sure that the big picture, we understand what that looks like. Anyways, from the local standpoint here, when we look at this back-end data here, this is basically the order blocks, just kind of telling us where people are trying to buy and sell the most. We can see 113,000 even, plus or minus $100 is that heavy concentration here locally. That's kind of the local support, and local resistance. It's really close to that 113.5K range. So by the time you watch this, that may actually have changed a little bit. But the concept remains the same here, that we're working within tighter margins for the moment. These aren't spread out super large. In other words, there's no massive outliers that tell us that we're going to be going in either direction. When it's tight like that, oftentimes it starts to compress and work itself into a type of channel. We're going to pay attention and see if that is the case. But just to quickly note, for CME futures, Bitcoin still has a gap between 110 and 111.3, and then Solana has a gap from roughly 203 to 207 that was partially filled. Okay, so those CME gaps are oftentimes filled at some point or another, right? So with us seeing this government potential shutdown, it may be safe to presume that we might see that CME gap at 110K filled soon, just based on the simple fact that market makers might just quickly sell a bunch of Bitcoin and then buy it right back up as soon as everyone else is liquidated. Speaking of liquidation, if we look at the last 30 days, we can recognize 115K is that upper range, and the local low is roughly 113. So we got pretty much, we're really close to that $113,000 range, so it makes more sense for the price to pull back a little bit further before it legs up again. And I talked about previously yesterday the $111,000 to $113,000 support range that we have as a likely area of good DCA targets. In other words, so you could DCA at 111, 112, and 113 and probably have some pretty good luck there. Now, I want to emphasize the word luck because that's what it is when you're trading against this type of fundamental catalyst. We don't truly know where we're going to go. Even without the fundamental catalyst, no one really knows where we're going. But the general concept here is that the short term, the next 24 hours is going to be kind of funky. So please recognize that. All right. So from a local perspective here, we can see 115K is the largest amount of liquidation in the last 24 hours, and 112,000 is that lower range. So we're slightly closer to 112. We have a little bit of downward selling pressure. It makes perfect sense for me to see the 111, 112, and 113K range in the relative near future. That's kind of what I'm leaning towards. So oftentimes in situations like this, I will miss boats sometimes. In other words, I'll wait for the pullback. It doesn't happen, and then kind of just have to find another opportunity later. So that might be the case, right? So if you're concerned about missing the boat because we have broken our short-term macro structure, or sorry, our short-term descending trend, basically letting us know that we are tentatively breaking bullish, you may want to consider averaging in. So get a position in the 113K range if you want. Just make sure you can add to that margin. You're not using your entire portfolio on that one trade. No more than 5% per trade, folks. That's the important thing. So let's take a quick look here at some liquidation levels, or liquidation amounts for specific coins we're going to be looking at here today. So just starting off with just Bitcoin, for example, we have a 26 million shorts and 17 million in longs. So that tells us more shorts than longs are getting liquidated in the last 24 hours, which is generally showing strength. Right? Same thing with Ethereum too. We have a slightly larger ratio there. Okay, we look at that, we compare that. Solana's a break even. A handful of other altcoins are going to be right there in that range. In fact, if we look at others, this is pretty much lower market cap coins. Majority of others are getting destroyed right now. In other words, there's a 5-to-1 ratio of liquidation. So as you can kind of see, the top 10 coins, BMB's in here, a handful of others, they're mostly getting liquidated to the upside, not the downside. So that shows strength at the top 100 coins, or just say, large market cap. All right. So that's important to recognize, because when we look at the altcoin season index, it's pulling back right now, and this does reflect that top 100 coins. So for the most part, even though it is pulling back, we're still over that $1.5 trillion level, which to me is just kind of a psychological support based on the large amount of volume in altcoins. Now we look at that and we compare that with altcoin season, fear and greed index. How those two correlate is that when we see fear and greed index slowly increasing, that's actually a positive sign that we are no longer fearish, because we're starting to see more buying activity. But you got to recognize that can be stunted out here soon. So generally, this isn't the greatest combination. This is letting us know that yes, large market cap coins are doing well, but for the most part, altcoins as a whole are correcting themselves larger and more significantly than Bitcoin. So if you're in coins right now that are not top 100, or more so specifically large market cap coins, the top 10, if you will, then you may be susceptible to some pretty significant continuation lower. So I guess that just kind of gives you the mindset of, what coin you're trading. Depending on what coin you're trading, you want to pretty much prepare for further correction to the downside, or if it's a large market cap coin, there's a decent chance they're starting to bottom out and will likely pivot and continue higher. Under the impression of the craziness in the world right now with the government shutdown, for example, doesn't spin things too far out of control. So let's take a look at Bitcoin kind of back end here, see what's going on. This is just kind of some liquidation levels. We can see there's a larger amount of liquidation occurring here to the downside. This was not really present yesterday, so we didn't have a lot of longs that had potential to get liquidated because there was very few of them. Now there's a lot more, so if the price continues a bit lower, we could see these areas get hit. So it's kind of spread out all the way through, down as low as 109K. Just above the price, though, we have some heavy liquidation at about 115. So please note, we make a push towards 115, we'll likely see a short squeeze there. And when we look at the large, basically top traders here, we can see the margin still low, so this isn't the most trustworthy information, but it does tell us they're starting to take more longs now as the price pulls back. Okay, so that's generally a good sign. I mean, usually when top traders are starting to become more active, regardless of their position size, it gives you some confidence in whichever direction they're heading. Just make sure that if you look at that on the weekends, it's not really the best gauge. All that said, we can see whale data. These are $100,000 to $1 million positions starting to dissipate as the price comes down. So it shows that we probably have more propensity for further downside because whales are no longer buying. They're probably selling right now. And we take a look at open interest. Once more, I've kind of just talked about this a lot, but 111 and 113, those are the two significant areas. So we lose 113, 111 is the likely next target. Now we do have 12 billion in liquidation long delta. This tells us that we are in really good shape and the price is more likely to continue higher in the overall sense because the bulls are in control. We can compare that with the local amount of liquidation. I like to look at the last 7 days generally, give us some perspective on where we're at. And this kind of tells us that we have a pretty big chunk still upwards of 116. There are some late longs here, of course, at 112, maybe 110 that might, or 111 that might get hit. We've talked about that already. But generally speaking, if we see a retest of 111, 112, the likelihood of pivoting and bouncing from there is quite high to sweep this area of 116. And we may actually continue higher moving forward here as well. It's just generally construed as a higher risk trade if you're going to take a long right now. So that's kind of the concept. But we can see here the previous high, also the moving average, kind of letting us know the 200-day SMA, also the 20-day SMA on larger time frames is giving us the indication that we're above that local trend and that significant area of support. So once again, 113 is proven to be a pretty strong support and resistance zone for us for Bitcoin. So we can presume we're going to hold above that level today. Now, presumptions and assumptions, those generally are not always the best thing to trade on, right? So why don't we take a look at the daily time frame and kind of understand where we're at. I know I've got a lot of lines on the charts here. I've got 2 different Fibonacci retracement levels. Kind of avoid those for the moment. And what we're looking at here solely on the daily time frame is just maintaining above 50 on the RSI. So we can close above 50 here on the RSI, basically putting us at 113,000 or higher. There's a distinct probability we go a bit further up. We've got our double stochastic swing to the upside. MACD's trying to converge. We've got some good momentum. There's a great chance we continue higher and we retest our descending trend line at roughly that 115 to 116K local resistance. And there's a good chance that we progress there on the short term. But just know at this point, again, taking a long right now is considered to be high risk. But I still stick to my guns here in the sense that 111, 112, and 113 are good dollar cost average targets. Under the impression this government shutdown doesn't really totally screw us. It's hard to really say specifically because these things don't happen too often. So oftentimes, again, if you're not sure, if you're ever unsure, you just don't trade. That's the concept. But the 4-hour time frame does tell us we have a lot of confluence here, right? We got support at 111.5. We've got support here at roughly 112.7. We've also got 50 on the RSI here, holding so far so good. We haven't tested it yet, but maintaining above that lets us know we're more so bullish than bearish. While we do have a stochastic swing to the downside, that's expected. We talked about that yesterday. The natural capitulation to the local high is a very common occurrence. So if we take a look here and we kind of zoom in a little bit, we can see we had a previous area of consolidation here at about 112,300. That would be the most logical place to consider taking a long, in my personal opinion. Just again, because it was a local high there that was tested for roughly 12 hours before it broke. And at this point, we're already about 12 hours of 12 to 16 hours of continuation here into a 36-hour potential, momentous trend, right? So we're halfway through this. I think it's probably best and safer to presume we're going to go a little bit lower before the price continues to bounce. So hypothetically, if you were to short right now, it should be considered to be a high risk, but less of a risk than taking a long. However, it's a tight margin. So unless you're trying to short to, the 111 to 112 range, I wouldn't try shorting to the $90,000 range. I think it's a bad idea, mainly because we've proven we've broken our short-term trend and you don't want to go against that. Even though the macro trend is still down, we want to see what happens tomorrow first. All right. So that's just kind of the concept there. So those are my thoughts. What are yours? Why don't you comment below? I hope it works out well for you either way. Thanks again for being a fantastic part of my life too. Let's go and take a look here next, of course, at some altcoins. Quick heads up to my traders, make sure you take full advantage of this offer here from Bitunix. There's a significant deposit reward bonus as well as a $16,000 individual reward for just trading on the exchange. If you use my link to register in the past, you're automatically eligible. If you use my link to register now, you're eligible for all future trading bonuses and competitions. Check out the links down below for more information. All right, folks, let's go and jump on into Ethereum here first. Just to get a baseline, let's double check the backend data here, kind of see where we're at. Let's go ahead and get a good refresh and just kind of identify the important areas of consolidation and or retracement, because we did talk yesterday about a likelihood of further downside here for Ethereum, just to basically retest its local high as a potential new low, because we're expecting Bitcoin to pull back. Now, Bitcoin is pulling back, but ETH is pulling back a little bit harder. So even though it is a good coin to consider long-term and or just a large market cap coin, has stronger propensity for further upside or just bottoming out better in general, we want to identify that. So just take a look here. Roughly 4,000 is that local area of open interest. While this isn't super definitive, it kind of reinforces once more there's that psychological support there. And as per usual, 4,300 and 4,400 are those two key level resistances for us. And we came really close to that. We hit like 4,250 as a close approximate there recently. So all that said, liquidation long delta is still in the green. So it doesn't imply that we're just going to go straight down from here, but it's that natural ebbs and flows, right? So we're starting to ebb now, and the price is pulling back. So that's kind of a standard thing here, all standard normal trading right now, nothing super crazy. While we do have a weird fundamental catalyst looming over on the horizon tomorrow, we're still looking pretty decent here for ETH. But the truth is that the chart, it's responding a lot poorer than some other altcoins that we're going to be looking at. So I'll show you on the charts what I mean by that. Anyways, liquidation upwards of 4,400, not a whole heck of a lot here locally. So this isn't necessarily a liquidation sweep to the downside unless we zoom in really far. We're probably not going to see too much there. This is just standard price action pulling back to likely the local high. And what I mean by that, so we take a look, the local high was roughly that 44,050 mark. So 40.50, right here in this range, we can expect the retracement to continue to that range there as a distinct probability. Once more, this is all based on Bitcoin, but if we look at Ethereum and Bitcoin, we actually compare the two. Let's do that right now. I like to kind of identify where we're at. So quickly to note, this is Bitcoin on the left-hand side, and on the right-hand side, we can see we've got Ethereum. So if we look at the same time frame, we can see a bit stronger of a correction here from Ethereum than we do with Bitcoin. Okay, Bitcoin is establishing a lower high where ETH still hasn't even done that yet, right? So when you compare the two coins, we can recognize there's a significant imbalance. Oftentimes, you don't want to try to take a long into that, right? That's the concept. So just be careful taking a long on this coin. If you're considering it, I would wait for that 4,000 to 40.50 mark first, which may not happen, but better to be safer than sorry, all right? So anyways, that's kind of the concept there. We look at the daily time frame just to recognize here too. Not much has changed here. We're still under all moving averages that are kind of hanging out at that 4,400 mark, but we also have 4,300 for that point of control. So that reinforces significant resistance there. So in hindsight, shorting that 42.50 mark would have been a good call. But obviously you would have had to been awake at a specific time. I was sleeping during that time. It's so easy to miss these kind of opportunities. But the truth is I was considering loosely a short in the $4,300 to $4,400 range, depending on how Bitcoin was performing. And right now, Bitcoin's performing as per usual, pulling back to its local high. So that's kind of where we're at there for Ethereum. Not too much has really changed. I'm just kind of waiting patiently to consider another long in the $4,000 mark, that low 4,000s, just to be safe. But once more, I'm gonna reevaluate when we get there. I'm not just gonna loosely take a long position in the blind right now. Okay, so just be careful with that. The long story short here is that Ethereum is a much better coin to consider shorting right now, but obviously with tight margins, because we may hold that $4,000 support range pretty well based on open interest, psychological support, and just a lot of accumulation here locally for that range. All right, so that's kind of where we're at there for ETH. Moving on to Solana, let's go ahead and see what's going on here. Solana is also underwhelming, but consolidating close to its local high. So let's see if that level may or may not hold based on the backend data. If we look here, once again, 210 is that local resistance range. We can also recognize the low 200s has a little bit of open interest. So as per usual, psychological support at that $200 mark. We can see liquidation long delta is now about 2 billion or 1.5. That's still in the green. That still implies the bulls are in control. As weird as it feels and weird as it sounds, we can see more longs than shorts. Right now, oftentimes when that comes up to a specific key level, that 215 range that we saw, and it pulls back, you will see that shift, that dynamic shift. So what we're hoping for is that we don't lose or we don't hit this break-even mark on liquidation delta. That implies that the bears have gained control and the bulls have lost it. Take a look at the 7-day. Let's just double check liquidation here. We want to see there is a chunk down as low as 202, 203. So we may see 203 before the price recovers. It would make sense that we do that because it's just below the local low. Oftentimes market makers love sweeping those local lows for those low time frames. Okay, so 203 would seem very probable at this point for Solana, especially with Bitcoin potentially losing that 113 support, moving towards 112, 111. All that being said, though, our local high here once more is at 205. So we do have a tentative support at 205 for Solana. If we look at the 4-hour, we have lost 50 in the RSI, and stochastic and MACD are diverging. Those are all bearish signs here, letting us know we have good momentum and likelihood of continuation lower. The daily time frame doesn't tell us too much from yesterday, but we are and have so far lost the 50-day SMA. So maintaining above that's super important. But once more, we got our macro point of control at 203. So a long hypothetically at 200 to 203 seems practical at this point, based on what's going on. So if tomorrow's news, whatever happens with the government shutdown, if that doesn't come too impactful and we don't see a significant correction from Bitcoin, then I think Solana should bounce off that local range. That would make the most sense. But overall, that's kind of the consensus there for Solana. What are your thoughts? Why don't you comment below? Love to hear it. Just before we take a look at the next altcoin, I want to recommend you consider trading with Bitunix. If you use my link to register down below or have in the past, you'll always be eligible for future trading competitions, but this one is awesome. It's probably the best one I've seen yet, with a full-on $16,000 individual prize pool, as well as a collective prize pool as well for the top 30 traders. Be sure to check out the link down below for more information. All right, let's move on to SUI. See what's going on here with SUI. Double check the macro structure. We are losing this local bottom here, this ascending trend. While this isn't like monumental per se, or like indicative, it's still a very concerning place to be, right? So it basically implies that we lose this level of the low $3 range, we could very well see our local low of like 250s retested. That's a distinct possibility, especially since we've closed on the 3-day time frame below 325, that local support. So those aren't signs we like to see on the charts. Let's double check the back end and just recognize not much here in regards to support. There's just that heavy open interest above the price at 340. Same thing as well with liquidation long delta. It's actually in the green for a change, which is nice, but I'm not sure how much longer that'll last with all this liquidation on the downside. Granted, this is the last 30 days worth of liquidation, but there's a ton of people that are going to be getting destroyed here soon if we're not careful. Let me go and refresh here. It looks like we got timed out. Quickly to pull this up, let's double check this really quick so we can see really quick here at the $3 mark. We got 305, 285, and 270. Those are like the three big chunks of liquidation on the downside. So as much as I don't like to short into a support, SUI definitely feels like it's going to pull back, especially if Bitcoin does too. So this may be a good consideration for a short. I don't relish the thought of shorting SUI because it's definitely a very volatile coin, but it certainly looks like it's on its last legs. Let's double check here on the daily time frame. And just quickly note, we are losing the 200-day SMA there. That's that ascending trend. We've remained below 50 on the RSI. Stochastic is swinging down. 4-hour time frame also reflects we lost 52. And we're now diverging on the MACD, or soon to. So there's a lot of signs here as to why SUI should continue to pull back. So if Bitcoin cannot close above 113,000 a day, I think there's a distinct probability SUI will go lower. Either way. Okay, that's all that being said, let's move on to XRP and wrap this up here. Double checking XRP, we can see that 290, as per usual, 303 are those two areas of resistance for us. So 290 held like a champ here locally. We took a long to basically from like 280, low 280s to 290s, and then basically got in and got out, right? So the concept there, if you're looking at these, if you're traded this, what, Solana 41%, ETH 67, there we go, XRP 49%. So when we took those trades, right, the concept was to get in and get out quickly, right? We're not going to try to hold to the metaphorical moon. So even though this pullback is normal and expected, we're not being ridiculous and taking trades that are just super outrageous, right? So what I'm getting at here is that XRP is still stuck under that resistance wall until we have a closure soundly above that 303 mark. There's no reason to be considered bullish on this coin. Tentatively bullish, one thing, but macro bullish is a whole nother story. Either way, liquidation long delta is still in the green, so this coin isn't like in terrible shape, but I really don't like the way that it's performing versus Bitcoin right now. We're seeing a pretty significant correction from a lot of altcoins right now. So you're going to be in much better shape if you're not taking longs. That's an easy way to understand it, at least for the next 24 hours. All that said, 275 is a heavy chunk of liquidation for XRP. I wouldn't be surprised if we see that. Taking a look here though at the daily time frame for XRP. Just note that we're still under our descending trend. This is running concurrent with the 20-day SMA. Also, that point of control at 303. We got our 0.618 fib level there here locally. There is like a lot of reasons why 303 is going to hold like a champ as a resistance. So the price does continue a bit higher to that $3 mark. I'm going to be very heavily interested in considering a short position under the impression Bitcoin is also looking like it's going to pull back. You got to recognize XRP moves quite consistent with Bitcoin in a lot of ways. For right now, it's 2x to the downside, and it's not really a good consideration for a long. If you're going to insist on a long, the key level support for XRP is 275. That runs consistent and concurrent with the liquidation levels here for XRP. Look at this, 275, pretty big chunk. So if you're going to consider a higher risk long, 275 seems like a practical consideration. But just note, 275 has been tested 1, 2, 3, 4, 5, 6, 7 times. It may very well break if we continue to retest it, right? The more often you retest something, the more like it is to break. Just like trying to kick a door down. I've never done it myself, but I assume that if you keep kicking a door, it will eventually break. Obviously depends on the door, but you get the analogy there. The concept remains the same. So that's kind of where we're at there. I hope this is helpful and beneficial. Thank you so much again for, once more, just being an amazing part of my life. If you want to become a better trader, cryptocash.tech is the site, link down below. Future reference, I do have a promo going on in the month of October, basically an October sale. It's hard to say, an October sale, essentially just providing you with some discounts. I've never offered a permanent access before. That is an option for you too. A lot of folks have been asking for that. So just know that's available for you there. More information to come. I'll be posting everything on social media here in the next 24 hours. I hope you have a great rest of the day though. We'll see you in the next one. Take care of yourself out there. Bye-bye.